Welcome back to the Truest Podcast, where we dive deep into industry leaders who are shaping the future. Today, we're incredibly excited to host a true force in the multifamily real estate world, Tyler Evans, co-founder of Align Ventures. Tyler's journey is nothing short of inspiring, from mastering the art of leasing to building managing a massive 6,000 unit portfolio. He's now successfully scaling his own ownership and management company. Now, with an ambitious goal of acquiring $60 million in real estate next year and a keen eye on the transformative power of AI, it brings a wealth of experience and a forward-thinking perspective. Get ready for a dynamic conversation as we explore his path, his growth strategies, and his vision for what's next in multifamily. Tyler, welcome to the show.
Marcus, so happy to be here. Great to see you again, man.
You too. All right, Tyler, now you spent 18 years in multifamily, starting from the ground up and eventually running a huge portfolio.
Absolutely.
What was that pivotal moment of realization that made you say, it's time to do this myself and launch Align Ventures? Where you're moving from managing for others to own a operation and your own assets?
Yeah, so I'll tell you, there was really one pivotal moment that sticks in my mind. We were in a meeting, executive meeting, and at this point I've been with this company for about 12 years, pouring my heart and soul into it, building it up, giving everything. And I really felt like I was an owner of that company. And I think I had somewhere in my mind that I was irreplaceable, right? That they couldn't do it without me. And there was this big shift in how we were going to be running things where they thought, well, the maintenance men know more about maintenance, so they should control all of maintenance, and property managers shouldn't really have a say in it. And I'm like, that's not really how it works. Property managers run the property. So I had a very firm opinion on that, and I wanted to go this way. And, at the end of the day, I was disregarded. It wasn't my company, so I didn't have a say so. And it kind of really hit me. It's like, you know what? You're an employee. You are replaceable. If you want to have a say so, then you need to build something of your own. You have the ability, the skills, and go out and do it. So that was a moment that really, stuck in my mind, where it's like, wow, you are an employee, you are replaceable. So, from that point, I started working towards it, investing in things on my own on the side. So buying small multifamily, kind of building that confidence in my abilities. And then I got to a point, I did a 16 unit property. I found it on Facebook Marketplace, got an amazing deal on it. I was in there renovating it. I was doing all the work myself, and I was able to sell that within a year and make, basically as much as I made a year working as an employee. So at that point I was like, all right, I'm ready. Let's go out here and do it, And so that's really how it started for me. It was just that one realization that you're a worker. You don't want to, there's nowhere to go from here. If you want to build something, you want to grow, you want to prosper, then you're going to have to step out. You're going to have to take a risk, and you're going to have to go do it.
Yeah, it's amazing how, your journey is a lot like others as far as being an employee. Say, I'm irreplaceable.
Yeah.
But we all are as an employee, but you took the leap.
Yeah, that's
and
the hardest part, I think, for everybody. And it's just so hard, especially when you like your job and it's just very comfortable. You get trapped in that comfort where you're like, man, so easy. I make good money. Like, why would I want to go anywhere? And it's like, well, so you can have control and freedom is why, but it's not easy by any means. You have to literally build and work and long hours, but it's all towards that goal of eventually being free and, financially, and being able to make your own decisions.
Okay, and so there's the 16 unit property that you eventually purchased and sold. Was it in the Houston area?
No, it was actually in Columbus, Ohio. That's where I was up there working at the time. Yeah, really nice little property. Just the timing for the seller, she had to get out of it, and I was ready. But once you're looking, you know what you're looking for. The opportunities are always out there. You just have to be constantly searching for them. And it takes that decision. They said, okay, I'm going to go out here and do this. People are like, oh, you're so lucky. You always find these deals. It's like, it's not luck. It's preparation. And it's like searching constantly. That's how you find them. That's how you get lucky.
Yeah. Preparation plus opportunities. Yeah. So, Align Visions is on an impressive trajectory, aiming for $60 million in new acquisition next year.
Yes,
Now
sir.
that's a significant growth.
It
Can
is.
can can you share some core strategies you're employing to achieve such ambitious targets? And what are some of the biggest challenges you anticipate navigating as you scale next year?
Yeah, so, for us, we've been doing it for a few years, really working hard on our systems and processes to be able to get to that point. Just everything we do, we try to create a system around that's scalable, and we work on improving that every time we do it, right? So each deal, due diligence, for example, we built a super detailed checklist to be sure that we don't miss anything. And then, we're going through that process right now on our current acquisition. So, we're like, oh, this wasn't on our list. So we add it in there. So next time that process is going to be that much smoother and more complete. So just doing that throughout all the systems, and even in our underwriting, we've had just throughout the year, we've underwritten hundreds and hundreds of deals, looked at a lot of opportunities, and we just continue to improve that process. How do we get more efficient? How do we get a little quicker? You save an hour here over 300 deals, it's 300 hours, right? So it's really that efficiency in the systems that help us prepare to scale, which there's a lot of work into that. But eventually, once you get the system right, it just works. So this last deal that we did, it worked really well, right? From the start of the underwriting, the tour, even so far the whole contract process. So we feel good about it, and that's just half of the battle, really. I think the other half is the market itself. There's a lot of challenges out there. I think one of the biggest one is other competition. Currently, we have a lot of investors still a little uncertain. The market and multifamily specifically is a little rocky the past 2 years, really due to interest rates spiking up. A lot of people were in adjustable deals, bridge loans, and now they're stuck in these, 8, 9, 10% rates that really just eat all their cash. And a lot of the investors that were in those deals are suffering. A lot of the sponsors are having a hard time. So we really haven't even seen that big wave of distress hit the market yet. And I think like loan defaults are at an all-time high on these deals. But because of that, we've seen this year not as much competition out there, which is great for us because you can actually underwrite a deal and go out there and put in a fair, good, solid offer and win a deal. But I think as we move into 2026, I think we're going to see even better opportunities, which are going to get a lot of people off the sidelines because everybody wants to buy at the bottom. Right? They wanna get that best deal, build some wealth, and I do feel like we're about there, or we're gonna be there, Q1. So I think that's gonna motivate a lot of these big guys to come back into the game, and unfortunately, when that happens, you have to pay a little bit more to win deals. So I think that's really the challenge there, but I'm super optimistic about the market and where it's heading and the opportunities we're gonna see. So I feel good about next year.
Good deal. And so I know, are you using third party software management companies to help you
As far
with your
as
process?
Yeah, we use a lot of software. So, in our acquisitions, for example, we use Crexi is one, and then CoStar is another one, right? So, we like to do a lot of data analysis. So, we need that data provider. It really expedites the process. Like when we're looking at our market comps, they have all the rent for every unit, the sizes. So, we're able to export that into our spreadsheet and then have all our analysis right there. And then also we like to use ChatGPT to help supplement our findings, right? So what I'll do is I'll put together this nice big spreadsheet with all the comps within 2 mile range. And then when I think I have a really good analysis, I feed it to ChatGPT, which knows what I'm looking for. I have a project around that, and I'm like, "Hey, give me some insights that I might have missed or didn't see." And it always gives me a really good analysis where it comes back and it's like, "Oh, did you notice that this property has X, Y, and Z? Maybe it has washers and dryers and the other ones don't." And I'm like, so there's usually some takeaways that I get from that process.
Okay. All right. So So you have a couple of things, but chat AI is artificial intelligence is
Mhm.
helping save some time. So I
Absolutely.
know being from Houston, myself being from the Houston area in the real estate scene, what are some of the most intriguing trends, and opportunities, or even unexpected challenges you're currently observing in the multifamily sector there?
Yeah, I think, well, for people that aren't from Houston, I think one of the biggest challenges they run into is zoning in Houston. It's just kind of, it's a little wild for people who aren't from here. You have, a school and then like a concrete factory and a gas station and just stuff all over the place. So I was actually at a conference, yesterday talking to people and they're like, it's crazy out there. But being from the city, you kind of know like the good areas, and where to look. And I think one of the trends right now in multifamily is just really more of a move towards more B class product or A class product for a lot of investors. And I think the root behind that is just kind of where the economy is and where the pressure is on the C class renters. Just everything's more expensive right now. And so for those renters, they're having a harder and harder time to get their rent paid and make ends meet. And when you're buying multifamily or running multifamily, usually your goal as an operator or an owner is to improve your net income, right? And you do that by adding ancillary things, cable, different things, or raising rents. But when this renter class is already kind of strapped, it becomes harder and harder to do because you get more delinquency, more vacancy. So definitely, I think there's a trend moving away from that right now, just because we don't really have a clear picture on when that'll resolve or how to fix that, right? So definitely, I think B class, there's a ton of opportunities out there. And I mentioned like cable packages. That's one of the big opportunities we're seeing a lot of people do, where you can get a bulk package. They'll supply the fiber to the property, and then you get modems, and you deliver it to your residents. You charge them $50 a month for 1 gig internet. You pay $30, so you get $20 a month per unit, and it's looked at because they're gonna have internet anyways. Everybody has internet these days. And $50 is about what they would pay or maybe even less. So it's not really, they don't consider it a rent expense. It's just kind of something they're going to pay anyways. So it helps you get that extra income in. And if you do the math on that, $20 a unit, so you have 200 units every month, you're getting that, and you do that at a cap rate, you're adding huge value, millions of dollars to the value of that asset from this additional income you're getting. Definitely seeing a trend, especially in Houston, Dallas, people implementing that strategy to help increase the values of their properties, get that income up.
Okay, yeah, it is a good idea that any little thing that's going to raise the value and increase the profits for the owners.
Exactly. Yeah, and
Uh,
the main thing for me is always, like, I don't wanna give people something they don't want, like, valet trash is one. Like, if I lived in the apartments, I'd be like, "I don't wanna pay you to pick my trash up, I'll take it myself. I wanna keep $20, you know?" But internet, yeah, yeah, go ahead and hook it up for me, like, I'm gonna pay for it anyway. So, you want it to give them value, not just make more money, is I think the main thing for me, but yeah.
so how many doors do you guys currently have?
Yeah, currently right under 500 doors in the Houston area.
Okay, and then will you? I know your first property was in, I mean, the 16 unit was in Ohio. Do you do other areas besides the Houston
We look at
area?
Dallas, we really like Dallas market, but man, it's hard to get a deal out there, it's so competitive. When people look at Houston versus Dallas, Dallas is definitely the darling. It just has a much better, I think in the country's mind, like, appeal. Because people look at Houston like oil and gas and boom and bust. Like, man, that was like 40 years ago. You still has that stigma, so it's definitely, you have a little better price per door in Houston, a little easier to win a deal. The Dallas deals, you tend to have people from New York, California, like all over the country bidding on them. So, the price just keeps going up and up and up. So we'd love to get into that market, but haven't had success in it yet. But Houston, we find, and especially since I'm here and, I'm local, I see the deals, I know the people, so it's a little easier. Also, we're trying to build some economy of scale, right? I think it's a little dangerous when you're buying properties all over the country, right? Because when you don't know that market and you don't have any people or infrastructure there, it's a little bit harder to get a grasp on it. When you have a little portfolio in an area, you can share resources, help each other out. You could drive down the road and see it. You can help out yourself if you need to. But when your property's in, 5-hour flight away, it's so much harder to get there and provide support to those people. So that's the other aspect of it. I like working local. Our underwriter's in Dallas, so he's very familiar with that market. So we're comfortable going into there because he knows it, he's there, he can put eyes on it. So we try to be present in the markets we operate.
Okay. All right. Let's switch to AI,
All right.
artificial intelligence. And
Love
so
it.
during our pre-call, you expressed a real enthusiasm for AI,
Absolutely.
which is definitely music to our ears at Truvix. How do you envision AI fundamentally changing the multifamily space, whether it's in property operations, tenant engagement, or even the investment analysis process?
I would say all of the above. I mean, and I don't even think it's an if, but it's absolutely a win. And we're already seeing implementations come on and they just improve rapidly. For example, there's EliseAI, which is literally an AI voice leasing agent, right? So you can call some of these properties, and to be honest, because when I'm doing my market surveys, I'm calling all these properties to verify all the information. And when I get these automated ones, it's almost easier to get all the information I need. The real people are a little hesitant to give me certain things, or they're slow about it, or they don't know. Where the AI, they're just, yeah, it's this. Here's this. I'll just all your information. So I can see that definitely taking more precedent in the market where, you pay, say $150 a month versus a full-time employee to lease apartments, right? So you're able to reduce your expenses and implement AI. You still have people on site to provide true customer service, but you just don't need that extra person, right? So I think I see that in operations. I know online leasing is huge now, online service requests, and I think AI will just kind of improve that process, right? Because service requests, for example, when a resident calls in and maybe they're not very descriptive, right? And they're just like, "Yeah, something doesn't work." And then they either put it in themselves, and it's like an outlet doesn't work. They don't say where or, or what it's doing, but I think AI will, help prompt them to help get better answers and make the maintenance guy's life more efficient, and just improve that process. So I could see that definitely taking some steps forward. And I think I think the underwriting and deal analysis part is going to be taken over by AI because it's literally data input and data analysis, which AI is phenomenal at. And like I said, we do all the footwork ourselves right now because we haven't found a method to really effectively put it in. And it's not always right. You have to still double check it. I think it's like 80%, but also it's improving so rapidly. I could see in the next year or two to where it's more like 99.9% accurate, right? To where you could literally feed it the offering memorandum, the comps, apartments.com website, and it'll do all the analysis for you and come back with your full underwrite. So I think that's just a matter of time, which will be interesting, to see how that changes the industry as a whole, because now everybody's like, "Oh, I could do it." There's a lot more to it than that, you know, business plan execution, but no, it definitely helps. I think um but yeah, I see it taking over the industry as a whole, most industries, honestly. Yep. ChatGPT. So we don't really have any other AI. We do like the professional version of ChatGPT, which we've kind of built out. We have, some custom GPTs we use for certain things, if it's underwriting or even for property performance analysis. So it kind of we program it to have our template, and we give it clear instructions of what it's looking for. And then I'm able to upload all the monthly property financials and it'll extract, really the full analysis for me of something that would have taken me, 3 or 4 hours to do per property. Now it's able to extract it in, 2 minutes and give me a fantastic takeaway. So, but no, we're constantly looking for new technology that we can implement, especially on the underwriting side. We do use it's called RedIQ. It's kind of it's got a little bit of AI, but basically we just upload like the rent roll and the profit and loss statement, and it will populate out a model for us. And they'll use, and it keeps track of all the models you've ever done. And so the expense ratios, the price per unit, it tracks all of that. And so it'll actually say, well, in this area, these are likely to be your expense ratios based on all the prior data you fed us. So, that alone is a huge help. So, and I would like to see that more encompassed with AI so it could be more intuitive and give more information. I think that's, I mean, probably not far away at all. So, but yeah, we're constantly looking for new things to implement. I love it.
All right, good deal. So you're definitely open-minded and understand the growth and where it can help save time. Like you mentioned, the custom chat GPT saving you pretty much almost 3 hours
Yeah,
worth of time doing it in 2 minutes from 2 to 3 hours. So
absolutely.
that's awesome. That's awesome. So let's talk about the growth mindset. I know you're a big fan of Tony Robbins and even attending his event tomorrow,
Sure.
leaving to it. Okay. How has that focus on personal and business mastery influenced your leadership style, your approach to overcoming obstacles, and ultimately align ventures journey of growth and transformation?
Yeah, I think our company culture, it's built heavily on that. And we follow a lot of those philosophies just in how we operate, right? It's, you know, one that I really like, it's overcoming your limiting beliefs, right? And it's you gotta question us. You're like, "Oh, we can't do 100 million in real estate. We're too small," you know? It's like, well, you have to question that. Like, why why do you feel that way? You know, what's preventing you from doing that? And when you really break that down and then you say, "Oh, I guess we could do that." Right? And then and we're very goal focused. We do objectives and key results. So every quarter we create objectives we want to hit and the key steps on how we're going to get there. So that's kind of a fundamental of Tony and some of these other guys. So we map it out, and we hold ourselves accountable. Accountability is a key to everything we do because you may not always succeed, but if you could take a lesson from that failure and say, here's what I could have done better, and next time I'm going to do this, or this is how I'm going to get this back on track, right? I think that allows us to just constantly move forward, right? And have that mindset of we will succeed, right? There's no if or it's even the words you use, right? It's like, well, it'd be really great if we could do this. It's like, no, we are doing this. Period. It's having positivity and determination and setting the right goals and the right vision, So we have our company, our 5-year vision, and we have our 1-year vision, and then it's about setting those goals in between to get us there. So I think that's important for anybody, really. Just your mindset is what your outcomes are going to be. So if you have an uncertainty about yourself or your ability to accomplish it, you're going to have a really hard time, right? Because you're not determined and your focus isn't fully there. You're always second guessing versus having that we're going to go out here and we're going to accomplish this. And this is exactly how we're going to do it. And then if you do fail somewhere, take that lesson, get better, improve yourself, and keep going. So I think that's really how that's helped impact our business and our growth and our trajectory is by really having those beliefs, using those lessons to improve ourselves constantly. And always learn, you know, always learn. Like we're never done. We constantly do market research and read books and people, there's always somebody who's doing more, they're doing better, and learn from them. Like, please show me, what are you doing, how are you accomplishing this, and take those lessons and then implement them into your plans. So I would say those are the keys for growth and success.
Well, great answers, and I believe in mindset, morning routines, different things. 'Cause your mind controls pretty much everything.
It really does.
What goes in, goes out. What you're listening to, that's all. That's important.
I couldn't agree more, man. Totally.
Important. All right, Tyler, we're gonna do shift gears, and I like to do a lightning round.
Okay.
So I'm gonna ask you some questions, and whatever come out,
Sounds
that's it.
fun.
All right. All right. Number one, if you could go back and give one piece of advice to your younger self when you first started in multifamily, what would it be?
Start buying earlier. Have confidence in yourself. I think that's it, right? The best time to buy is yesterday.
True. What's one non-negotiable tech tool or app that keeps you running smoothly every day?
My calendar, my Google Calendar, it literally runs my life. Everything I do is in there.
All right, good deal. What's the most surprising and unexpected thing you learned about either real estate investors or tenants over the years?
They want to be heard. That's really goes for both. People just want to be heard. You got to listen and be genuine. And if you do that, then you're going to probably find a lot of success.
Now, if you weren't building a real estate empire, what other dream career would you be pursuing?
Oh, that's a good one. I don't know. Probably social media superstar. Seems like a fun job. You're well on your way, man. You're doing good.
In one word, how would you describe the future impact of AI on real estate?
Transformative.
All right, good. Then what's a common misconception people have about property management that you love to set straight?
It's easy. It's not easy. It takes a lot of work, a lot of determination, a lot of patience. So, yeah, people have a misconception there that you just sit in the office and answer phones. So there's a lot more to it than that.
Last question. What's your favorite restaurant in Houston?
Favorite restaurant, I would have to say Toca Moderna. It's like a little Latin inspired, amazing place. Highly recommend checking it out. They like to light everything on fire, so you get a show.
All right, where is that located?
It's like River Oaks, Midtown area.
Okay. All right. I'm gonna have to check it out when I come back and visit family.
Yeah, the Kobe tacos, phenomenal. Highly
Kobe
recommend.
tacos. Okay. All right. I appreciate you joining. And that brings us to the end of another incredible conversation on the TrueBits podcast. A massive thank you to our phenomenal guest today, Tyler Evans of Align Ventures, for sharing his wisdom, his inspiring stories, and his fast forward-looking perspective on multifamily world and the exciting potential of AI. It has been an incredible, absolutely pleasure, Tyler. Now, Tyler, how can listeners connect with you?
Yeah, you can go to our website. It's investav.com. Book a call if you want to learn more. Happy to get on a phone and just chat real estate. So feel free to look me up.
All right, make sure you check them out. All right, thank you, Tyler.